If you own there, sell.
Why were investors piling into the suburb?
You're about to bag South Australia, you're about to bag WA, and you're about to bag Queensland.
Is this the right opportunity for me for a 600k price point? Can I find something where the vacancy rate's not going through the roof?
South Australia is investor dominated recently. What are the people doing? What are the big buyers agents doing? What are competitors doing? What are peers doing? Where are the worst areas in Australia to invest in right now? After our recent spicy episode about going through areas to avoid in Melbourne, we thought we'd go wider and give Adi the reins to tell us where not to invest in 2025 all across Australia. This one is going to give you some insights as to what areas and locations and the macro frameworks to watch out for that often look a little bit different to what you think. I'm really excited to go through this because I have just worked out what these three areas are, and they all hold some sort of framework there that are like, wow, I could not believe that these have popped up as the worst areas to invest in. Adi, how are you, man?
I'm good, man. I'm good. Yeah. So I want to frame this in one way, right? So obviously we're calling the worst suburbs, but everything is relative. We spoke about relativity in the previous one. Some of the data that's sort of coming out of these suburbs, and they're all in different states. I wanted to diversify my bagging of suburbs to different states in Australia. I didn't want to just localize it. Yeah. There's not a Melbourne play. It's just across the board, right?
Yeah.
And it sort of plays to that narrative of, hey, there are markets within markets. If there's one market that's doing really well and looks really promising, you might go like 4 doors down and suddenly like, oh God, I don't really want to be here anymore. So that was the framework here. That's the story that I want to tell. That, you know, even though you might have heard about these in the grapevines, you know, in the last few years and it looked fantastic, may not be the place to go right now because there are better opportunities out there.
For sure.
That's the main thing.
For sure. Adi, I don't think you've realized, unintentionally, in this series of episodes that we've gone through, you've bagged people in Melbourne. You've just picked 3 more states. You picked, I'm just going to call it states. You've bagged Victoria. Yep. You're about to bag South Australia, you're about to bag WA, and you're about to bag Queensland, and you've already bagged Northern Territory. What's up, man? Are you having a tough time?
Look, my neck hurts. So usually when my neck hurts, it translates to me just, I get grumpy.
You're like, this area sucks. My neck hurts. This area sucks. This state sucks.
I wanted to bring a bit of when I watch you and Curtis, too positive. I'm like, nah, this is. I want to bring down the energy level. So do you like the negative aura that's been created?
I'm having fun.
I know you are.
I'm jamming.
I love
it.
So
I'm learning a lot from this. Actually,
I love the segue was so serious into basically saying, Addy,
you're a douche.
You're a douche. You're the very douche that you'll be the one on YouTube commenting on someone else's earrings. All right, so shall we get into it? Right?
I like how we're roasting that guy hard. Yeah, you deserve it. Yeah. You deserve it. Okay. Anyway, let's go on.
So we are at Elizabeth Vale in South Australia. Okay.
Cool.
So
we're in Elizabeth in South Australia.
I know.
Wow.
So
cool. This has been a good performer.
It has been a very good performer,
yeah.
And that's the interesting thing, right? I've actually almost on purpose chosen places that have been good performance in the last 3 or 4 years. They're the anti-Melbourne, right? Melbourne didn't do anything. These places exploded.
Wow.
But now we're in 2025. So the question is, are these the places you still want to go into because they've done so well in the last 4 years? And let me share with you, and a lot of them are going to have a very similar story here. That's what I like about it, right? It's a very similar story. The data is always almost saying the same thing. You just have to learn how to read it. So Elizabeth Vale, it is sitting at a price point of $629 now. It has had a 20...
What?
I know.
I'm pretty sure when I looked at it, like it was like in the 100s.
Yeah.
Like 100 something. Like,
I know.
I've financed a few deals at like 190 in Elizabeth. Houses,
it's bizarre.
Maybe 200. Is that right? Does it sound...
absolutely.
10 years ago. 600,000. Wow.
620,000 is
it's tripled.
And not a very, very short
Best
amount
area
of time.
to invest in. Yeah.
So 629, the yield is sitting at sub 4%, which is bizarre, right? Because I think when you were talking about 190, you were talking about yields in the sixes and sevens,
8,
right?
9,
So it has literally halved in the span of 4 or 5 years. So again, a pretty big red flag as far as
To be honest, I'm sold. You've actually sold me. You don't need to say anything else. Elizabeth in the 600s with the sub
That's all you need to
4%.
say.
I'm done.
Should I just
I'm
move
out.
on?
I'm out.
Should I just
Are you
move on?
crazy? Elizabeth, this is like Adelaide's worst spot. Am I right? Like
Yeah,
in terms of its like.
it's not nice. I mean, would
location?
I go out when there's no daylight? Probably not.
Yeah.
I'll just be more careful.
You should be really careful.
I
now.
should be. Yeah, that's true. I should be
You're
very, very careful.
identifiable. It's your face here.
That's true. My name is Reedham Saeed. I'm from Sydney. I'm a mortgage broker. I'm from Flint Invest. So
No comment.
One
He
of the
wants
red
to
flags.
be me.
One of the red flags. One of the massive red flags.
Yes.
Apart from having a 600K price point of Elizabeth Vale, is that it has one of the sharpest rising vacancy rates that I've seen.
Really?
So-
Oh, he's found it. This
Right,
is
so-
this is scary. Tell me
It
why.
is scary, right? So let's walk through the logic of this. So you saw contracts being made in Elizabeth 5 years ago, 4 years ago, 3 years
over
ago.
the last 10 years,
In the
actually.
hundreds, 200s, 300s as well.
Yes.
Why were investors piling into the suburb? Because the yields were great, it was affordable, and in that period of the whole interest rate rise thing, you're like, yeah, why wouldn't I buy a 200K that's giving me a 6% yield? We said the same thing about Darwin, right? There is a genuine narrative there. Now, what happens when that many investors flock into an area that wasn't that prevalent with investors? Investors have flocked in, but they've flocked in for the last 3 or 4 years. So suddenly you've got this surge in rental stock in these areas. Now there's too much rental stock. So there's not enough renters available for all the stock that has been picked up by investors. So if I'm in 2025, we're in March at the moment, I'm looking for a yield play, right? I want something affordable. I want a yield play. I've heard about Elizabeth doing really well. So I go and check the data and I'm like,
It's a crap yield play, man. Yeah, yield play.
That's what I mean. Like you're buying sub 4% yield in Elizabeth in South Australia at a 600K price point. Tell me why you wouldn't go to Melbourne then, because you're getting the same sort of numbers, right? Except the vacancy rates are actually going the other way. So it's all relative. It's all market cycles. I don't know. I almost want to like
Yeah,
get
why would you
people in
make
a
it
room.
15?
Like,
Yeah, doesn't make sense.
it's just, guys, it's all about reading that data. Just read the data, make informed decisions. This is what I feel so passionate. I feel like I want to jump out of this chair because I'm like, please be mindful of sort of some of the, because I've seen circulated emails from other, let's say, buyers agents on LinkedIn or whatever, who are still talking about these areas as if they are the greatest thing available.
So
right?
one thing I've actually picked up, my like market analysis. So before we partnered together at Alaya, my market analysis was working out what are other people doing? What are the big buyers agents doing? What are competitors doing? What are peers doing? And what I found in this research is people don't change. It's like I built all my contacts there. I'm a buyer's agent in this market basically, and I kind of find buyers to sell these properties to buyer's agent. But I only buy in these areas. I'm finding this in Perth a lot as well, where it's just like, hey, there's a lot of like, it's late. It's very late in the piece here. Why are you buying here? Why are the majority of your transactions here? It's because they've developed all the connections, the networks, but it's not changing as the data changes, and it's not moving around as you need to, depending on location. So I think that's probably it. It's just inertia, like laziness. You see this in mortgage broking a little bit as well, where it's just like, hey, I deal with this lender. I've learned how to do it. I learned these policies. I'm not going to go work out something else. Like I just deal with this. That's you see that a little bit in the broking space, and I feel like it exists in the buyer's agency space because it's humans doing it, and humans are naturally biased towards a little bit of easiness and simplicity. And if you've developed all the connections, networks, that's your IP a little bit. It takes a lot of time to develop those relationships, and you're like, cool. How about I keep making that happen rather than find new relationships in a completely new, different market?
Yeah, and I think. I mean, they're completely fair, right? I understand the psychology behind it, but what kind of sucks is if you're an investor who's coming in and you're relying on this person because you watch them on a podcast or a forum like this, and you trust them to deliver something amazing for you, you don't know the mechanics of what's happening in the internal business, right? You don't know that they're making these decisions. The founders are making the decisions to not invest in other markets because it's too hard to go and build those relationships.
Or they're not making decisions. I think that's probably it. They're just like...
It's just easy to stay where we have been for the last 3 years.
I don't need to go back to the dartboard and have a new...
That's right. So I think where we have sort of... I know we chat a lot. We have had many late nights talking about this, is that one of the steps that we want to take into this industry is that we want to do it the difficult way, right? We want to take the time to get to know, like our team is like going into new markets
all the time
as we speak, right?
Yes.
Because it is harder, but we're finding superstars who are good at that part of their job, who can go and establish relationships, build rapport at scale, and we potentially go and talk to these people 2-3 months in advance to even buying there, right? Because we want to introduce ourselves, and it's harder, and it's more time intensive. There's more human element to it, and it sucks from a bottom line perspective, right? But
it's about results.
It's about results, right? I can still probably buy a client a property in Elizabeth Vale. They'll probably see a 10% rise in the next 12 months. I can pat myself on the back and say, hey, look how good I am. But what they don't know, and they're happy too, because in the 12 months, they've gone up 10%, 15%. But what happens is 3 years comes around, 4 years comes around.
Yeah.
I'm
at a
maybe no
3.5%
longer,
yield.
3.5% yield. And they're like, well, that kind of sucks. Like you told me the story. It's no longer playing out. So something to be mindful of next time you're sort of thinking about, getting professional help.
I'm out. Elizabeth
out? Okay.
Elizabeth out. Sell. I'm going to go. If you own there, sell.
Sell,
I think I've pissed off a lot of South Australians there. Let me add some layer of context there to that vacancy rate story though.
Yes.
So one metric that I do is owner-occupier growth rates and investor growth rates in housing finance data. This is checking out how many people are buying in a certain location. Is there growth happening? And who is buying? Who's the composition of buyers at a particular point in time? So you could do this quarterly. South Australia has a lot of demand there at the moment and has done really, really well. But over the last year, there's been a shift. Owner-occupier growth rates are still pretty strong, about 17% in terms of the increase in owner-occupier housing finance. But house prices have risen, 10% plus. So the total number of people isn't that much. It's just house prices have risen, so the total debt size is larger in owner-occupier finance. Compared to other states, Queensland is at 35%, New South Wales at 20, 25, so is Victoria. South Australia is sitting near the bottom of the pack in owner-occupier housing finance growth. On investor housing finance growth, other than Darwin now, which is, it's like 500-600%, something ridiculous. It'll break I run out of dots to put in the spreadsheet and I have to make it wider. That's such an outlier. South Australia is investor dominated recently. Because it's investor dominated, you're starting to see that investor vacancy rate pop up. Doesn't surprise me. I expect to see the same in Darwin.
I agree. Yeah.
Darwin's just a bit different because it's not an owner-occupier market. It's transient. It is supposed to have, 60-70% investors. It's supposed to not be 30-70. It's supposed to be the other way around because that's the type of market it is. So it can be an investor market because it's an investor-led market. It's always been that way. It's going to remain that way. South Australia is different. People live in South Australia and it's like, I stay in South Australia. They don't move to South Australia for a job. They just stay in South Australia even when they're unemployed. That's there. It's got a strong economy. It's got lots of strong economic fundamentals for the long term. That's there. But it's priced. There's no price mismatch. In fact, it was like this, but now it's gone there. And the price mismatch might be slightly the other way. I don't think it is. I think it's just priced right for such a strong economy. But there's no compelling reason to invest there. It's a little bit like, why would I invest in the middle of Sydney at the moment and get a negative 20K a year cash flow? It's a bit like that. So
I agree.
No brainer not to invest there now.
Not investing. But the story, this is what I find, I love the data, right? The story doesn't just play out in South Australia like that. The story also plays out in other states. So we're talking about Queensland now.
Ooh, what did you
We've
find?
talked about Ipswich a lot, right?
Ooh,
so when you look at Leichhardt at Ipswich, it has such an amazingly similar story.
I've been there, man.
Have you?
To invest, actually. Yeah.
Really?
I went and looked at it's an area where there's house and land packages where you get duplexes, I think. I remember looking at this about 10 years ago. I went up there to go take a look.
You should have bought it 10 years ago. Don't
it's
buy
bad
it
now.
in 2025.
Yeah. Should have bought
it. Similar story.
Yes.
Vacancy rates going through the roof. The rent-to-owner ratio is scary at 64%. So it is a very investor-led market in Queensland. Not a transient market.
Yeah, that's a bit odd.
It is very odd. These are outliers, right? And this all goes back to the first statement or the first thing that I said. This is all relative. There probably were suburbs out there, but it's relative to who you are and your investment profile, right?
Yes.
If you are looking to invest in 2025, you have a 600K budget.
What's its yield?
It's 3.94 in Ipswich. I know. And it's gone down 13%. The yield has dropped.
How much has price gone up?
Price has gone up 20%. It's
in
all
the
the
last
same
year?
stories in the last year, right? Which is insane, right? So again, if you have a 600K price point, you want a pretty healthy yield because everyone flocks to Queensland because they want the yield. You're not getting that yield anymore. So you got to ask yourself, is this the right opportunity for me for a 600K price point? Can I find something where the vacancy rate's not going through the roof? It's actually dropping off a cliff. So I always try and layer my thinking in that way. It's not that it's a bad place. It's just a bad place relative to this other place, you know? So that's my thinking around Leichhardt as well. It has a very similar story, narrative to Elizabeth Vale.
Can you tell me Elizabeth's last year's price growth?
20% as well.
Wow. Okay. This is why I love this episode. It's so interesting. If you follow traditional investing mechanisms, you can easily be sold. I'm putting your money into a place that rose 20% last year. That is how good it is. It is skyrocketing and you get to buy that skyrocket. I can easily sell that to you. Very easy, and many people are. But we're sitting here saying that these skyrocketing areas that have skyrocketed are the worst areas in Australia to invest in right now. What the hell? Like, this sounds crazy. Like, it's a complete contrary opinion. The reason for that is because the price level has gone so much, it sits in a higher risk territory. You are buying too late. It goes back to the market cycle timing that we're all talking about. You do not want to be buying in an area that's doubled or tripled in such a short time period and has risen 20%. And the yield is so bad at the moment, where it's just like, yeah, you're probably going to see a nice little juicy return in the short time period because you're buying on an upswing, but it's too late and you're going to be holding this asset for a long period of time. It's too late. That's kind of the
pretty
theory.
I think that's the story.
What's
here.
the vacancy in?
The vacancy rate in Leichhardt at the moment, it is steeply rising. It is
vacancy rate is the number of properties
2.67%.
And is it rising?
Well, very steeply.
Yes. Wow. Okay.
2.67%.
Yeah. So when you look at vacancy rates, you're looking at how the number of properties for rent are available. If there's a number of more properties available for rent, then it means that rental growth will start coming down, and that. Yeah, there's more investors there as well because it's investors providing that rental accommodation.
That's right. And renters just have more choice. That's all it is, right? So they can go to a thing, we're like, oh, I don't want this one, I want this one.
For sure.
Whereas Melbourne has a very opposite narrative because the vacancy rates are all sub 1%. The rents are going to rise faster because renters are like, well, I have there's 20 of us here, but there's only that one house. So let me go and, give $50 more, and that sort of rises the market. So that's true. Not a great look. I don't like Leichhardt as a place. I'm sure it's gorgeous with a lot of house and land packages, but not a package.
I haven't been there for 10 years, so I'm not too sure I can speak too much about it. What have you got here? Oh, I can see your screen. This is exciting. This is another juicy one.
I know. This is Lismore. Lismore in NSW, right? So
this has done well, right?
This has done really well. 17% in the last year. This is what it make.
Do you have a 3-year growth rate? Is that on these little?
Yeah. 3 years is 5%
per year.
Per year,
so it's just
annualized. Yeah.
So it's just grown a lot recently.
Yes. Yep.
Wow. So why is Lismore bad? That's crazy.
It's just it's a similar narrative, man. Anytime I see red flags, the red flags for me are affordability is crappy for a 600K price point. We're talking about an affordability of 42 years.
Yep.
For a $600,000 house, it shouldn't take you 42 years based on local incomes to pay off that house.
Cool.
That's not, and I think just the steepness of the rise of the unaffordability, it freaks me out. I just don't like it. Maybe it's personal, but there is definitely a data story there. Again, very low socioeconomics, which kind of makes sense because it is a lower price point area, and it was for the last 2 or 3 years. Renter-owner ratio, again, is 48%. Like, why would you want to go into an area that is not Darwin, that is not transient, it's not meant to be transient, that's got half of the population is investors, is just not where you want to be.
That makes sense.
Part of again, going back to the same whole vacancy rates thing, again, prices have increased so dramatically in the last 12 months. Yields have dropped 13%. 13% drop in yield.
Yep,
so if you're going into Lismore, you're looking for a yield play, you're not getting a yield play. It's 4.2% on average.
Wow, that's pretty low for a regional area.
Town, right? Yep. You kind of go into these towns for those reasons. So again, the framing here is not to talk about, Elizabeth Vale, Leichhardt, or Lismore. I mean, it's all cycles. 4 years ago, I would have been sitting here, if you had this podcast, being like, oh my gosh, I love Lismore and I love Elizabeth Vale. If I could pick up a property for 250K, You know
what I found here as well? This story is really, really interesting because I was like, you're speaking and while you're talking, I didn't mean to not look at you, I was picking up on something. I'm like, there's an economic story in Lismore happening. There must be something. I can see it in this data set, right? Be like, you look at the data of the suburbs, and I've always looked at Macro. The one level before that, what's actually driving some of this? That's our jam. That's us tangoing and dancing around, like gliding on a dance floor. If I look at this, you had a nosediving in unemployment in Lismore from around 6% down to 3% in 2022 to 2023. That is the 20% price growth. Correct. You've had a 50% reduction in unemployment.
Correct.
Economy's done really, really well. It's skyrocketed back up. Like New South Wales is a gentle increase in unemployment. This is just a sharp increase in unemployment. So whatever drove Lismore, there's an economic story there. Lismore, get out.
Yes.
It's probably too late, I think. Maybe it could be, but it's time to get out. Get out, basically. If this unemployment holds, if I owned in Lismore, I would be doing a lot of research as to what is driving that local economy, what's driving that change in unemployment back down and up. If that up trajectory remains, it's time to leave, especially if that's a couple employers. It's probably a couple big employers because it's a smaller market that have just closed up shop, being like, I'm out, I'm letting people go. There's something going on there with this story. So that price growth trajectory, I think it should be really, really high on your list of, hey, be careful.
Massive red flag.
There's a big red flag with its unemployment story, and it's just trending up, if that makes sense. So if that continues to go up, then Lismore property prices will fall. Like it would keep getting worse and worse.
This almost has, again, I don't know Lismore's like economy down to the T, but kind of seems like a 1-2 industry dependent market. The industry's gone a bit, belly up. Something's happening there. So you're right. And this is, I guess, this is what I love about the work that you and I do, right? You bring that economics lens to it. You have the macro lens to it. You sort of look at things at a higher level. Yeah. You're like, oh, well, the economic activity,
going on? Yeah.
In Darwin's improving, right? We seeing that in the high level data. And then you're like, oh, gosh, okay.
Yeah, I wonder when that out in the suburbs over time.
It has to, right? That it happens every single time. Yes. So
the story is an economy does well, a business starts producing things there, businesses start doing better, or the government starts doing things. People get jobs. When people get jobs, people move there, or they buy a house. That's the narrative for everyone. Or they buy an investment property. It's the same application story everywhere before a property is actually transacted on. And if that happens en masse, on aggregate, more properties are transacted on, and houses don't just appear overnight. There's just a limited amount of them. It takes long to build. There's a delay in that demand happens. When supply doesn't increase, price growth happens. That's pretty much the story there. Lismore has had a very, very strange unemployment story. It's just dramatically shot up. It is nearly, the regional New South Wales average is 3.5%. Lismore was 3% last year. Now it's nearly 6% again, like 5.3%. Whatever's going on, it's very, very messy there. If I owned property there, I'd be like, I probably would have looked at this being like, it's time to get out. Mainly because you made a lot of money, but it looks like you made a lot of money in a year, and that not so much over 3. All the growth has happened in the last year. So that growth isn't sustainable. I love this one. What a great pickup that you've picked up here. Because, we've got to talk about some of the macro factors that drive this.
That's right. And I think going back to, I guess, what we are doing, between Flint and Alea, it's bringing these lenses to our investment thesis for our clients, right? It's like, hey, we are starting here, guys. We start our research level here. This is all my conversations with people. Yeah, sure. Start our investment sort of lens here, like at the high level, what's happening at the economic level. Then we start looking at data level. So all of the investment decisions that we're helping you make is underpinned by so much research from 2 people who've been doing this for a long time.
Love it.
And a team who is sort of very well versed in finding the right asset once we have found the right market for you. So. For sure.
A great team out here as well. Like I have picked this up from working with you for a little bit and working with our team at Alea. There's out of nowhere, like you were a single person operator a little while ago before we met. And now look, there's over half dozen of us working together to build this up for our clients, buying in nearly a dozen odd locations all across Australia where it makes sense. Some regional areas, some areas that we've talked about, some that we haven't, we'll probably get to over time. We are all about transparency and sharing that information. But also just unpacking why we are investing here and why we're not, where it makes sense. It all starts with that economic change element and understanding why an economic change is happening. Even if we can find it before that economic change, there is some crystal ball gazing that does happen throughout research phases. That's how we picked Darwin a little while ago, and some of the other Melbourne markets that we were talking about, Currum Downs, that some of that is that macro movement change. And we did an episode on that, 10 macro things to look at and how that will drive markets. So we do need to put our lens in there. And then it flows through to the suburbs from there, and that drives the suburb selection that we're doing. And there's a great team behind you now that's working around the clock, picking up the phone, speaking to real estate agents all across the country where our markets are buying in, sourcing those properties on and off market, and then supported by a number of more talented individuals helping you source and find properties. Amazing journey you've been on, Adi. It has been an absolute pleasure to be on this little ride with you at Alaya. So yeah, well done.
Thank you.
Very exciting.
No
longer hiring, right?
No longer hiring at the moment.
Yeah,
we are all hired out for the time being.
Yes.
But
yeah, it makes sense when you hire so many people so quickly. So,
yeah, exactly. We've sort of exploded a little bit. So I think we're trying to find our feet now. Like everyone trying to find where they fit into the puzzle. It is a bit of a disjointed puzzle at the moment, but it's an exciting story because there is a half dozen of us sort of with a shared mission of like just educate first, find the right property for the right person at the right time, and it's a very exciting place.
You're making tangible impact, Adi. I love that. I know that's really what you're all about as well. So
I appreciate
amazing work. Yeah, let's leave it there. 3 areas to avoid. Lismore, its economic story is really poor. Leichhardt in Queensland, there's a number of reasons why that data story is a bit uncomfortable. And then there's Elizabeth, an area that would have made a lot of sense before, but no longer does. That's the summary. It's unpacking why you do not want to invest in areas to help you work this out. When you combine this with the frameworks of why to invest in an area, you have the full picture of how you actually work things out that should help you make some better financial decisions.